So today I'm going to dive into some methods that you can use to chart your support resistance levels without overcomplicating things, because a lot of traders, they make the mistake of drawing all these diagonal levels or trying to find obscure levels in the markets. But the key is to actually keep it simple. You want to use support levels that other traders are also using, because then you buy together. That's what creates support, and vice versa with resistance. So we know support resistance can be subjective. You give 100 traders a chart, they're all going to draw different levels. But today, I'm going to try make it somewhat objective to give you a stepping stone into drawing your own levels. So some key levels I like to draw are high time frame levels and medium time frame levels, because a monthly open, that encapsulates weekly traders, daily traders, 4-hour time frame traders, 1-minute time frame traders. So everyone's using the same level, which can offer both low time frame and high time frame reactions around them. And that's the key. You're looking for reactions. Don't look at a level as it has to be support or has to be resistance, because price can either break above it and flip it, or it can respect it and reject from it. You've got to be fluid as a trader. And it's similar with your median time frame levels. You've got weekly open and daily open. That's for your intra-week reactions and intraday reactions. So let's dive into a live example in the charts with some SR levels mapped out here. So I've got a combination of yearly opens, monthly opens, weekly opens, and daily opens all marked out. We can start off by looking at a daily open over here. So 12 a.m. UTC on Friday, this candle begun dumping, but as soon as you reclaim the candle, you back test it as then support. That was your key signal that price is likely to continue higher. That level got respected perfectly. So that's one example of how you can use daily opens for your intraday trading. Now, when it comes to something like your weekly open, so let's look at those green levels on the chart here. Notice how when this week opened, you initially started off with a rally, and every time it dumped, where did it come back to? Came back to the weekly open, came back to the weekly open before continuing on higher. So that level clearly showed respect. Didn't break through, it held as support. You then formed a new weekly open here. Initially you lost it, led to some downtrend continuation, which on low time frame, your scalpers would be trading that. And then when you reclaimed it, led to continuation. We then have a weekly open over here. This one didn't come back for a back test later on in the week. So again, just goes to show, not every level's going to play out perfectly as you want it. Your job is to draw levels that get respected and use those. Not everything's going to work to the T. So those are your weekly levels. Now we also have in blue your monthly levels. So notice how even on the weekly time frame you can see weekly open, December open acting as resistance. You then get above it, and on the daily it really shows it best. So on the daily you can now see all of the individual rejections at the December open. You then flip it, leads to continuation. You hold it as support, leads to further continuation. Very, very simple. And then when you lose the December open, guess what? You backtest it as resistance, leads to downtrend continuation. And that was then combined with losing the 2026 open, led to continuation lower. So here you can see these levels play out super well, and even if you're a 1-hour trader, this can offer a completely different set of trades. Between the 2026 open holding as support, you could be looking for longs and selling it back at the December open. And selling the December open, buying back at the 2026 open. You can repeat that over and over until it stops working. That played out beautifully. So as you can see, a 1-hour trader is doing a completely different set of trades to the 4-hour and daily trader using these exact same levels, because they're useful to everyone when you pick the high time frame levels. Now, even something as high time frame as yearly levels like the 2025 open, notice how you let the level form for a little bit, and it acts as support, acts as support, acts as support, break through it, turns into resistance, then you break through it again, turns into support, leads to continuation. Overall, levels respected throughout the beginnings of 2025, but also late 2025. Again, broke through the level. Initially, it held, but that reaction wasn't big enough for a proper rally. Not every reaction is going to lead to ripping rallies. It could just hold for a day. You flip it from there, acts as resistance, acts as resistance, acts as resistance. The multi-candle false breakout here, which again, not everything's going to work out perfectly and lead to trends, but overall, on the close back inside, acts as resistance for lower. So you can see how all these levels play out really nicely over time. Even your 2022 open, go to the weekly, you can see initially acted as resistance, and then even 2 years later, 2024, second time acted as resistance. Then you flip it the third time because it gets weaker the more you test it, and that led to continuation higher. So that's an objective way to mark support resistance in super quick form. So hope you guys enjoyed. Let me know in the comments if you found it useful. I'll see you in the next one.